Welcome back. Fox Eyes on the Hill this Sunday morning. You know, for the first time in more than 3 years, inflation slowed below 3%. This comes after the highest inflation numbers that have been seen in decades. It is still not clear when or if the Federal Reserve is going to lower interest rates, which are now 2%, but may pave the way for the Fed to cut rates next month. Mark Avallone, familiar face here on the Hill, he's the president of Potomac Wealth Advisors, joins us again for his perspective. So this news comes out, Mark, Wednesday morning that inflation has dropped again. Now, we've been hearing these, chatter that Fed is going to lower interest rates in September. Does this news from Wednesday make it more likely or not that that's actually going to happen in September?
And that's a great question. The answer is it probably helps. It's still to be determined because the Federal Reserve wants inflation closer to 2%. And even though this is good news, 2.9 is still pretty close to 3. But it takes a little pressure off of them because we had a weaker employment number in July, and the Federal Reserve has a dual mandate to keep unemployment low and inflation low. So that's why they may lower it in September.
I've heard dueling explanations of that employment number. One, it's the summer. Maybe people are not out in the job market as much. The other is that, when hiring was kind of at a pitch rate, that a lot of those jobs got filled. Does either one matter? Does it matter more what the number is or what the reason is?
Well, there's a lot that goes into the data. It's not just the unemployment number. The Fed is looking at a lot. They're looking at how many people are applying for jobs. They're looking at wage growth, and they're looking at all of this in composite. But basically, the labor market is starting to slow, and the Federal Reserve doesn't want to be late. They don't want to be causing a recession, so they may lubricate the economy with less expensive money and lower interest rates.
One of the things we heard over and over and over again in 2023 was a recession is coming.
Right.
That it was almost a given. The governor of Virginia, Glenn Youngkin, was saying it almost as a certainty. Didn't happen. Should we still be on guard for a recession at this point? Because, these numbers, while they improved, aren't quite what I think optimistically people would want to say would reflect a strong, healthy economy.
Hey, you're absolutely right. The U.S. economy has been super resilient. The calls were for a slowdown. The calls were for a recession. But remember, we have a lot of government spending on that CHIPS Act, the Infrastructure Act, right? There's been a lot of infrastructure that's happening, and that creates economic activity. And you have technology improving efficiencies for companies. And we've managed to stay competitive. Earnings have been strong. And even if we get a recession, not all recessions are created equally. It could be a shallow, short recession. Painful for the people who may be losing their jobs, but it doesn't look like we're having a deep recession.
One of the things we're also hearing about the economy right now is that consumer credit levels are astronomical. A lot of people have been loading up and trying to get through these hard times economically on credit cards. How big of a problem is that when you're trying to assess the health of our economy right now if people are racking up credit card bills that they're either struggling or not able to pay?
Well, it's tough. Americans are very good at spending. They enjoy spending, especially in the summer, as you alluded to earlier. They want to go to the beach and they want to enjoy life, especially after COVID. That's to be expected. I think the Federal Reserve takes that into consideration, and lower rates will actually help them with their credit card balances. We just hope they're not overextending themselves.
Now, you are a financial analyst. I know you're not a political analyst, but these politicians are going to go out this fall and say things about the economy, so we want to decipher what is true and what is not. Donald Trump's been saying the economy is a disaster right now. The Democrats have been saying it's in great shape. Who's telling the truth?
Disaster might be a strong word. There's pain in some points, and there's a lot of debt. All that government spending creates debt. That's not good. Unemployment's ticking up. That's not good. But look, the stock market's at an all-time high, and wage growth has been strong. So both people at the top in the investor class, as well as workers, are doing okay right now. So I think it's somewhere in the middle.
Mark Avallone is the president of Potomac Wealth Advisors. Always a pleasure to have you at this couch on the Hill here to kind of give us some perspective on what's happened and what's ahead.
Always great. Always great to talk to you.